So hoping to avoid a repeat of the Fannie Mae and Freddie Mac crisis, the Obama administration is considering charging the mortgage industry new fees, which would cover the cost of the government backing home loans, she tried to say. That may be a long-term solution. The huge problem in the immediate term, though, is the rising number of homeowners simply walking away from their underwater mortgages. Is this immoral or smart economic sense? And what are the legal and economic repercussions when you ditch your mortgage debt? Answers now from real estate attorney Shari Olefson with Fowler, White & Biggs, and Mike Menatian, who's president of Sanborn Mortgage. Ladies and gentlemen, good to see you. Mike, let me start with you. The United States is pretty unique in most of the world in that we have, for the most part, non-recourse loans. That means if you don't pay your mortgage, they don't come after your other assets. You could have $100,000 in the bank, but the only thing the bank is going to seize is that home that you're not paying anymore.
Right.
Is that a bad idea? Does that make it too easy to walk away from your mortgage?
Absolutely. I mean, what's going to continue to happen with the numbers that came out today on existing home sales, that's a shot across the bow that you're going to see with demand decreasing that much, values drop that much more. And more people are going to walk away. And what's happening now, there's 1 in 4 foreclosures are strategic defaults, meaning someone's walking away that has the wherewithal to pay it, but saying, you know what, I'm not going to bother. It's not worth it. I'm walking away. And that's going to make not only other neighbors and neighborhoods and towns and cities, values continue to decline.
Shari, how do you respond to that? And isn't there also the counter-argument that when you have mostly non-recourse loans like we do in the United States, you have a far more robust housing market in general because the banks absorb the risk of buying a house rather than the homeowner?
It looks like that on the surface, but obviously at the end of the day we're paying for that because the banks will end up tightening credit and raising the cost to borrow for us. You know, these strategic defaulters are after two things. They're after someone to pay their obligation, in other words, someone to repay the money that they borrowed, and then, of course, they're after the ability to stay in their home for as long as they can without having to pay. So there are a couple of ways we can attack that. Fannie Mae is doing a good job by requiring someone who strategically defaulted to wait longer before they can qualify for a new Fannie Mae mortgage again. But there are other things we can do. One of the things that I see all the time is people living in their homes and not paying the mortgage, and lawyers, unfortunately members of my profession, out there helping them do that and essentially taking advantage of a national crisis because they know that the court systems are already overburdened.
How do you incentivize?
So one thing that judges...
How do you incentivize people, Shari, to not default and not go into foreclosure, or disincentivize them from walking away and just putting the keys in the mail?
Right, and that's going to be a series of actions. Some incentives could be providing programs to help people get their mortgage paid down sooner, or to provide incentives like possibly tax incentives for paying down your mortgage, or maybe even for owning your home free and clear. Judges, for example, might be able to require homeowners to escrow their mortgage payments while they're fighting that foreclosure, so you eliminate that incentive of being able to live for free. Or if it's an income property, requiring them to put the rent in a lockbox account so that they're not just taking that rent and walking away with it.
Mike, why don't you react to what Shari just proposed, but more sort of basically, why don't banks and lenders insist that the loans become recourse loans? Why
in
not
some
do that?
states, it is. You can go after the other assets, and often it doesn't happen. In some states, you can't. That's where you're finding the foreclosures at the highest level because there is no recourse. But I think there needs to be that. Second of all, I mean, what's going to continue? You'll continue to see. It's a spiraling effect. If we don't stop it now, it's just going to get that much worse. And if they can pay it and they've signed the note, they should pay it.
But you know what,
Fannie's
Mike?
making it tougher.
Businesses do that all the time. Real estate developers do it all the time. They buy a property, it's no longer worth what they originally paid for it, and they go to the bank and they say, let's sit down, you know you're not getting the whole thing, and let's figure something out. But we put this moral imposition on homeowners, but it doesn't occur in business. Why should it occur in homeownership?
Well, maybe if we take the moral thing out, what Fannie's doing about loans in the future, they're making it tougher to get a loan in the future. Credit scores should be hit harder because of this, and there will be more. We should almost create a stigma to this, which it's not there anymore.
But there's going to be a cost, right, guys? I mean, if we do all of those things, that means that you have less turnover in homes. I mean, if you want to increase buying and selling of homes, which is what everybody wants, all that we're talking about right now is actually making it more difficult in the end. So
But in the longer term, do you end up with a
Exactly.
Yes,
That's the question.
There's no question it's a balancing act. But at the end of the day, this is going to cost us more anyway. And with the new numbers that came out today, we've got 12 and a half months of inventory, another 7 million properties in shadow inventory that will probably sell for about 27% under market. And there's going to be a growing number of negative equity people. So we need to address this now.
Thank you all.
Thanks.
You know, Michelle goes looking longer term versus
shorter
term,
term,
I think. All right, when we come back.